Hello friends, and welcome to Looking at the Markets with David Modell. Today I'm going to give you a trading strategy. It is a type of morning gap trading strategy. It's for intraday trading or day trading. And I call it the gap, fill, and go trading strategy. So you might have heard about the gap and go or the gap and fill. Well, this is gap, fill, and go. All right, so before I get started, I just want to let you know that if you want more help with trading or investing, you want some help putting together a plan for your trading or your investing, because you definitely want to have a plan if you want to be successful in the long term, you can email me for coaching at davidmodell@gmail.com. All right, so let's take a look. So this is on tradingview.com, and this is the 1 minute candlestick chart. I recommend for this trying the 1 minute candlestick chart because you're going to want a lot of detail as opposed to the 5 minute candlestick chart where you don't get a new candlestick formed until every 5 minutes, so you get less detail, or the 15 minute or something like that. But you could use whatever you like. You can use the 1, 2, 3 minute candlestick chart, whatever you like. And so what you have is a gap here. This is Micron stock, 1 minute candlestick chart. And so as you can see, you had yesterday's close, and then today's open is a lot higher than yesterday's close, and that's called a gap because you have some trading in the aftermarket, after hours on this day, and then also in the pre-market hours on this day. And so oftentimes it'll open higher or lower than yesterday's close. And so that's called a gap. And today, with this strategy, I'm going to focus on gap ups, not gap downs. Okay, so as you can see, there's a gap up compared to, in today's open compared to yesterday's close. What happens sometimes, though, you get what's called a fill, basically a retracement. It goes back in the opposite direction. All right, and this is a complete fill. It totally filled the gap back to yesterday's close. Okay, sometimes you have a partial retracement or partial fill, like 50%, let's say, but this was 100%, and that's what I'm looking for. And what I've noticed sometimes, what happens after the full retracement or full fill of the gap, complete fill, what happens sometimes is it's almost like a magical force comes in. It's not really magic, but a seemingly magical force comes in and then pushes it back up throughout the day, up and up and up, okay? And so, but it's not really magic. If you're wondering what's going on there, a lot of the time is that this will be, I hate to call it the dumb money. That's not very nice. But what's the opposite of the smart money, right? It's the the morning people who have just been waiting to get in. They rush right in, and they buy after something is very high. So that's the retail traders. A lot of them get in, and then they get dumped on. And then who buys low? The dumb money? No, the smart money. The institutional traders step in because they want to buy low. They wait for the retail money, the dumb money. Again, I don't mean to use that disparaging a term, but they wait for the retails to get dumped on and to lose money, and then they step in, then they buy. That happens sometimes, so, and then they do well. And unfortunately, the retail's not so much. All right, so. What you want to do if you want to try the strategy out is wait for wait for a nice big gap up and then a full retracement. That's powerful. And then you can step in, start accumulating, or take a long position if you want to. Now, where you put your stop loss, where you put your profit target, that's a whole separate video. I do have a video on that. I'll put that in the link below this video in the description if you want to learn about stop losses and profit targets, things like that. But your profit target in this case could easily have been the height of the gap there. All right. So let's take a look. That's Micron stock. Let's take a look at another example. Home Depot stock, same thing. You got that. That's where it closed the previous day. 1 minute chart again, and then it opened up here. And the retails who bought up here, the so-called dumb money, they really got dumped on. They got hit hard. Went right back to that same level about where it opened, And then in steps the smart money, the institutional traders, the algos, and they did quite well, up and up and up. All right. So again, this it's not perfect, and this will not work 100% of the time. So you want to have some sort of stop loss probably in place, or just some way of some exit strategy in case it goes against you. And I also recommend virtual or demo account trading at first, just to make sure that it works for you before committing capital, before committing real capital to it, and using very small position sizes when you do attempt to trade it with real capital, so you don't get hurt too badly if it goes against you. All right. I hope this was helpful to you. It's a new approach. So instead of just gap and go, or gap and fill, you've got gap, fill, and go, and go, and go, and go, right? Okay. Doesn't always work out perfectly like this, so just be aware of that. All right. But more importantly, you want to have a plan, so you know what to do, when to get in, when to get out, which stocks to even put on your watch list and to trade, things like that. Position sizes, how much do you put in there, things like that. I help people with that, so if you want the coaching, you can email me at davidmodell@gmail.com. And hey, if you like this video, let me know, and that way I can be encouraged to put out more videos like this one. And you can let me know by giving me a thumbs up on this video if you like it, and leave a comment. And if you have not subscribed yet, hey, why not do that right now? Subscribe to my YouTube channel and hit that notification bell on YouTube, and that way you'll get an update from YouTube, a notification whenever I put out videos like this one. Thanks a lot. I really appreciate it. I'll talk to you again soon.